Let us look at Article 25, Paragraph 2 of the India-USA Treaty. Paragraph 1 dealt with the credit by the United States. Paragraph 2 deals with the credit to be granted by India. Where a resident of India derives income. Now, unlike US, here the stress is on resident. We do not mention citizen here because in India, the taxation is not based on citizenship, right? So where a resident of India derives income, which in accordance with the provision of this convention may be taxed in the United States. So the stress is on income which US legitimately has a right to tax. If the income is not taxable in accordance with this convention in US, but still it is taxed in US, then the credit for the taxes which have been paid in US may not be available in India, right? So the first condition is a resident of India should get income. The income should be derived, should be such which has been taxed in US as per the treaty provision. And if this happens, then the outcome is what? India shall. It's not an option. If the income has been taxed in US as per the treaty, then India is under an obligation to allow as a deduction from the tax on the income of that resident an amount equal to the income tax paid in the United States, whether directly or by deduction. So once the tax has been paid in accordance with the treaty provision in US, India is under an obligation to allow a deduction from the income tax of that resident. You cannot claim a benefit for a tax which has been withheld by someone else, right? An amount equal to the income tax paid in the US, whether directly by this resident or by deduction, right? So India is under an obligation to give a credit for these taxes, but such deduction shall not, however, exceed that part of the income tax as computed before the deduction is given, which is attributable to the income which may be taxed in the United States. What this means is that if the income on which the deduction has been done in US is also taxable in India, right? Then India is under an obligation to give a credit. But the credit will be limited to the amount of tax which is payable on such income in India, right? Let us take an example here. Suppose the income which is given in US is $100. The US tax on such income, let's say, is $35, right? India also has a right to tax this income, and the Indian tax which is there on such income is $30, right? Now, when it comes to credit, suppose the tax on such income is $30 and tax on other income is $50 in India. So the total tax liability is $80. What this second paragraph means is that when you allow a deduction for the taxes which have been paid in US, it shall be limited to the amount of tax payable on the income on which taxes have been paid in US. So if in US on this $100 you've paid $35 and on this $100 the tax in India is 30, then the deduction will not be 35. It will be limited to the amount of tax which is to be paid in India on such income. So therefore, $30 will be the deduction which will be given. There will be zero tax on such income, and the other $50 tax which he has to pay in India will be paid. India is not going to reduce this excess $5, the unutilized $5 over here, against taxes payable on other income. Further, where such resident is a company by which a surtax is payable in India, so if the person, the recipient, has to pay surtax in India, the deduction in respect of income tax paid in US shall be allowed in the first instance from the income tax payable by the company in India, and as to the balance, if any, from the surtax payable by it in India. Continuing in this example, if this Indian company also had to pay a surtax of, let's say, $3 on such income in India, in that case, it can claim a credit of this $5 of unutilized credit against this $3. So first come first, the credit has to be from income to income. If there's any surplus which is remaining, and on that surplus there's a surtax which is payable in India, then that surplus may be used to offset liability against such surtax. Some of the key features of paragraph 2: the tax on income should be in accordance with the provision of the convention. I would say US tax on such income should be in accordance with the provision of convention for the purpose of our example. Deduction for US tax limited to the income tax which is attributable to income which may be taxed in United States. Surplus tax in US after set off of income at bullet 2 as in here, is adjustable against surtax payable in India.